Hey everyone, welcome back to Crypto Cash. Thank you for joining me here. Hope you're having a great day and you're doing better than I am. This will probably be my only analysis for the day, considering I feel totally terrible, and I probably sound the same as well. So apologize in advance for less content, as well as more important, the sound of me plugging my nose when I'm not. It kind of sucks. But either way, what we're going to look at here is Bitcoin, quickly understanding that we're testing this lower range here. There is a lot of liquidation on the downside, so we could very well see a sweep of 104, 105K. I think that's less likely because this support zone here of 106 to 107K has been heavily guarded. So we'll talk about that here in a bit. But not much has changed from a liquidation standpoint, roughly the same. If we do look at open interest, or sorry, correction, liquidation delta, we can see we have about 6 billion in liquidation shorts in the market right now, basically implying more shorts than longs. You generally don't want to buy these kind of dips is what it tells us. However, I will kind of let you know these kind of dips have been very successful for a lot of people too, based on the simple fact that we're in a range and we're in the lower range. Hypothetically, you buy at support and you should be able to find some profit. So take that with a grain of salt. Unfortunately, range-bound trading can be kind of a lot of false positives, if you will. Okay, so taking a look here at the open interest, that hasn't changed much. Once more, we got this heavily guarded area of roughly 107K, just to keep it simple, 107,000. Below that, we got 105.2 as a rough estimate for our secondary area of support based on open interest. Once again, this is more the macro perspective. This is last month's worth of open interest. So taking a look here at the daily time frame, quickly to note, we can see here on the daily that we are still in decent shape. I know it sounds weird to say, considering we're pulling back, but we're not terrible. We're in this position where we have our previous high or weekly closure at about roughly 106,000. We got our 0.68 fib level right underneath that level, and we got our 20-day SMA. There's a handful of supporting factors here, implying that the 106 to 107K range is the likely bottom for the moment, right? That can obviously change a lot, but generally speaking, anytime the price comes down to this area in the last week, we have seen a significant amount of buying pressure at 107. So that kind of helps a lot. Now, when it comes to the stochastic and MACD, these are all things that are kind of letting us know that further downside should be expected. So from a momentum standpoint, yeah, we're starting to build some momentum to the downside. It really just depends on if we can break through this barrier of 106 to 107K. Now, when it comes to the 4-hour time frame, there's nothing really good here. I mentioned this yesterday, that hasn't changed much. We're under our moving averages. We're in a position where we're under 50 on the RSI. Until we stay above or close above, really, there's not much to note here that we're gonna magically recover. Okay, so really depends on what kind of trader you are at this point. Are you the buy the support kind of trader? Do you like to trade ranges? I personally hate them, so I don't really like to trade the range. But at this point, hypothetically, you could find success buying this dip and taking profit in the 108.7 to 109K range. Once more, all depends on the kind of trader you are. Obviously, from a spot bag perspective, it's a different story altogether. Hourly time frame is probably also going to confirm, which it does, that we are underneath the cloud. We have no real reason to consider a long position from a technical standpoint outside of just range-bound trading. So once more, it all kind of goes back to where you are as a trader and what works best for you. So me personally at this point, I'm going to wait for the price action to bounce and hopefully continue higher. I think we are in pretty good shape still. There's nothing super crazy on the charts here, but once more, it's a lot of just conflicting garbage. I mean, the simple way to understand it, this is trash. These candle wicks are just complete trash. So there is definitely fundamental stuff going on. There's also back-end stuff too when it comes to what James Wynn, I think he's called. He has liquidation at 106,300. My guess is this is going to be, targeted. It came down to like 106.4 just a moment ago. So I wouldn't be surprised if we see this guy get liquidated here again. He's probably hedging his longs with his shorts and so on and so forth. But still, that is definitely a factor as well. Just consistent manipulation of the market, folks. So the best thing at this point, me personally, when these things happen, I generally kind of shy away from trading. I like to kind of hang out and wait for a definitive direction to be established first. So if we do close below, 107, 106K here today, then there's a solid chance we may continue lower. Between now and then, I don't think we need to, run for the hills just yet. Cool. All right, folks. Hope that makes sense and I described it correctly. I'll post a playout chart on our Twitter, Telegram, and Discord. It's available here for you if you want it. Otherwise, I hope you all have a good rest of your day. Thanks again so much for being an awesome part of my life. We'll see you again tomorrow. Take care.